Finance Minister Lim Guan Eng has clarified that the Pakatan Harapan government has never borrowed in order to pay its civil servants' salaries. In a statement today, Lim said this had been proven by the reaffirmation of Malaysia's sovereign credit ratings at A3 or A- with a stable outlook. He explained that if the government were to borrow for the purpose of paying its civil servants, this would inevitably lead to an immediate credit rating downgrade. The minister was responding to a remark made by UMNO Deputy President Datuk Sri Muhammad Hassan during the Negeri Sembilan budget debate on November 25th. Lim called Muhammad Hassan's allegation false and easily disproved. The finance minister pointed out that the government is on target to cut its fiscal deficit from 3.7% of GDP to 3.4% this year. He added that all borrowings are used to finance the fiscal deficit and development expenditures, as had been done under previous administrations. Maybank says third quarter net profit rose 2.1% to 2 billion ringgit on higher net interest and Islamic banking income. Quarterly revenue rose 14.7% to 13.8 billion ringgit. Group President and CEO Dato' Abdul Farid Alias says this year has been relatively challenging for some of the bank's clients due to the slower growth in global trade. The group is currently working with them to restructure their facilities. Looking ahead, Maybank says the operating environment continues to be unpredictable, with growth seen moderating for its three home markets of Malaysia, Singapore and Indonesia. Against this backdrop, the country's largest lender by assets plans to maintain its balance sheet expansion in line with the respective GDP growth in the three markets and in tandem with the group's risk posture. It expects its financial performance for 2019 to be satisfactory. Plantation conglomerate FGV Holdings is expecting its operational numbers to continue improving as it reports a narrower quarterly loss for the third quarter of FY 2019. Net loss for the 3 months through September stood at 262.4 million compared with 849.5 million ringgit previously on the back of lower impairments. Revenue rose by 11% to 3.6 billion despite a sharp fall in CPO prices and lower average selling price for sugar. FGV Group CEO Dato' Haris Fadzila Hassan says the group's transformation plan is obviously bearing fruit and expects CPO prices to stay higher in the fourth quarter. FGV is also repositioning itself to capitalize on its large land bank and vast resources to create alternative earning streams, which could potentially generate additional revenues of 100 million ringgit a year. Hassan says that FGV is also currently in talks with partners in China to export 700,000 metric tons of sugar, given the excess capacity brought about by MSM Holdings' new Johor refinery. DRB-Hicom returned to the black for its latest quarter, reporting a net profit of 40.1 million compared with a net loss of 11.4 million previously, thanks in large part to improving fortunes at subsidiary Proton Holdings. Revenue for the 3 months ended September 30th also grew by 12.9% to 3.6 billion ringgit. It should be noted that DRB-Hicom is currently operating a 9-month financial period for 2019 due to the group changing its financial year from March to December. The group's automotive segment was the clear earnings driver, with revenue for the division improving by almost $500 million year-on-year to 2.42 billion ringgit. Proton saw its market share improve to 15.8% year-to-date, which makes it the second best-selling automotive brand, backed by the new X70 and the revamped Saga, Persona, Iris and Exora. However, dampening earnings was post-Malaysia, which is facing a challenging landscape. Going forward, DRB-Hicom says that as the year wraps up, Proton and its other automotive brands will seek to gain momentum through its usual array of aggressive year-end promotions. As for its other businesses, the conglomerate says the focus will remain on prudent cost management and improving efficiency. Lembaga Tabung Haji recorded a net profit of 500 million ringgit for the third quarter of this year, boosting its profit for the first 9 months to 1.3 billion ringgit. In a statement, the Pilgrims Fund said the positive outcome was a result of ongoing cost-saving measures in its management and administration. Revenue for the quarter came in at 900 million, which brought LTH's 9-month top line to 2.1 billion ringgit. LTH said the bulk of funds, more than 50%, was generated by its fixed income asset investment. It said the shift in the fund's investment strategy to a more stable investment asset managed to ease the pressure from equity market volatility. Deposits reached 70 billion ringgit as of September 30, 2019, and depositors now number 9.43 million.